but this is a massive deal. General Catalyst and Trian taking Janus Henderson, an asset manager, private. I mean, do they need access to the funds that, you know, Janus Henderson would have in reserve?
Yeah, I mean, I can imagine, Vonnie, that the private equity group is very much interested in the funds under management by Janus Henderson. And it really just speaks to kind of the broader evolving just the landscape of finance, right? We have seen a lot more institutional investors, the likes of pension funds, for instance, playing with the idea of diving into private equity, where, of course, there's a lot more reward potentially, but also potentially a lot more risk, just because of the fact that the companies involved in this space very differently structured from publicly traded companies. But, you know, there's a wall of money out there, right? Like waiting to be put to work, especially now that we're kind of potentially seeing a shift in the interest rate landscape as well. And so, yeah, you have to imagine that, you know, the interest in funds, assets under management with Janus, very much of interest among these types of companies, private equity. And conversely, the investors with Janus as well, potentially interested in those assets as well.
Yeah.
Of course, there is a lot more M&A happening, a lot more IPOs, animal spirits are up, and investors, strategists are bullish, right? We have a story on the Bloomberg showing that there's really tightly clustered targets all headed in the same direction.
Absolutely, Matt. And really to be expected, right? Because it really has not paid off to be a bear in really the past decade when it comes to the equity market. Over the past decade, we've seen the S&P 500 deliver annual gains for, 7 out of the last 10 years. And the years that it did deliver annual declines, it was really more because of external shocks rather than whatever's going on with the market exclusively. And, you know, very interesting, actually, the forecasts were looking for around an 11% gain for the S&P 500, which is half of what we've seen over the last 2 years. So you could argue, actually, maybe they are bullish, but a little less so than the last couple of years.
But it's a little bit terrifying, though, right, Kristine? Because, you know, all of those fragilities that have been out there for the last several months are still there. Very few of them have been resolved. So the tariff uncertainty is still there. We don't know what the SCOTUS decision is going to be. You know, the effects of the One Big Beautiful Bill, we don't know what that's going to be next year. The data is a little distorted, if not stale completely. So how can analysts be so sure?
Well, I mean, Vonnie, again, right, like just kind of the expectation for that much of a gain, which is, when you put into context of the broader S&P 500 moves that we've seen over the last few years, it is a little bit less, right? And so the bullishness has been tempered, and you're absolutely right. So many risk events here, and I think that is what kind of is causing a little bit of that more subdued outlook. I mean, when it comes to the Supreme Court decision on tariffs, very much a focal point for markets next year. We have seen, though, from the latest Markets Pulse survey that my team does, that people are optimistic about the potential for the removal of those tariffs. So the expectation is that the S&P 500 is more likely to go higher if we do see, in fact, the removal of those tariffs, probably just because of an improvement to risk sentiment.
And what's the MLive team have planned for the holiday? How do you staff up through, well, I guess President Trump has wanted to make Christmas Eve and Boxing Day holidays as well.
Don't worry, Matt, we're going to be around. I'm going to be around personally, keeping the lights on. But no, I mean, yeah, I think, you know, these days actually are the most dangerous in some ways, right, when it comes to the market movements. I mean, a few years ago, I remember, what was it? December 24th was the biggest day for equity volatility a few years back. And so we're coming to that point in time where volatility is low. You have much fewer players. And that is when there is greatest potential for markets to gyrate wildly, especially if we have any sort of unexpected risk that's playing out. So don't worry about it. We're going to be around. Call on us if you need anything.